Tesla and Wall Street never got along, like cats and dogs or balls and batteries. And there is a good reason for that. Tesla is not exactly a conventional public company, and there are pros and cons for that, of course. This week, Tesla once again announced their deliveries, and they were record deliveries for the brand. But Wall Street did not like that, and I know it sounds kind of funny that the market did not like the fact that a company produced a record number of products. Maybe it had something to do with Elon sending out an email that got leaked through saying that they're really trying to get to 100,000 units. But would it by the way, when he writes those emails, they're gonna get leaked. But at the same time, I understand it's a way to avoid these guys over here. And stock did not react very well. It fell a few percentage points, and there are some reasons for it. But I also am starting to wonder, could it be that Wall Street has been right about Tesla all along? Because there has been quite a few issues that gotten exposed despite the amazing run for this company as far as innovation is concerned, and pushing the boundaries and just grabbing market share from everyone. So let's talk about it, but I don't have to talk about it just by myself. It is Sunday, so Eli Burton of My Tesla Adventure is here for his segment Supercharged with Eli Burton. So he's going to be here in just 1 second. Before that, a quick reminder that this video and the show is sponsored by Byte, and check out their all-electric SUV called Byte. That's right, it's coming to the US, coming to Europe as well, starting at around 45,000 American dollars, 45,000 euros. $0 and euros to put a deposit down to reserve yours today. So go to the description of this video to do just that. All right, so without further ado, I'm gonna bring in Eli, and we're gonna talk about this. Eli, how you doing, my friend?
Alex, how's it going, man? I'm glad to be back on your show.
Yeah, absolutely. It's awesome to have you every week. We have something interesting to talk about, and I've already shown the stock chart to, for this week, and as you can see, there's a little bit of a break there, and this is when Tesla announced that they've delivered 97,000 cars, which is record, because last time the record was the previous quarter at 95,000. Correct me if I'm wrong, but at 95,000, they've lost about 400 million, and I think it's reasonable to expect that they once again going to lose just a little less, but still they're going to be losing money this quarter as well. Tell me why Wall Street is reacting this way, and do you think Elon's sort of a high goal of 100,000 units has something to do with that?
Yeah, so Elon did set a goal of 100,000 units, which they hit 97, which tells me that 100,000 wasn't in the range of impossible. So they missed their goal by about 3%. Not huge, but I think the bigger reason is it's not just what Elon estimated, but Wall Street makes their own estimates independent of what companies say. And this didn't hit Wall Street's estimates. So, Wall Street analysts had expectations of what it was going to do. When it underperforms expectations, stock price tends to drop. Now, the thing that the narrative I saw going on Wall Street, which I'm looking forward to talking about here, is CNBC and some of the other news organizations were calling into question, is Tesla not seeing a shrinking demand? And I think that may have been something in that, speculation put into the ethos that might have helped drive share prices down the couple days after the end of quarter.
Okay, so but let me ask you this: shouldn't the Wall Street expectations sort of already have the built-in of a bit of a disappointment, and knowing that Tesla doesn't usually meet their own goals and their goals as well? And why were they expecting more than what they've already made, right? I mean, they were off by only 3,000 cars, which is, in the grand scheme of things, is not a big deal. Why can't Wall Street adjust to Tesla? I know they're unique, but still.
Yeah, I can't really tell you why Wall Street as a group makes their own estimates, and I get why they do, because a lot of companies can be wildly inaccurate, and Wall Street looks at other things too, right? They, especially the big firms that really invest heavily in these companies, they use their own research means to try and get an assessment on how many units of a product a company is delivering, because it's a huge competitive advantage for their shareholders if they can get a sense ahead of time that, hey, maybe a company is going to underperform or overperform what market expectations are. So, I mean, it's just a common thing that Wall Street does. And what a lot of companies have done a good job at doing, and I've seen a lot of stories comparing this to Apple and Steve Jobs, is that one of the things that Apple's been historically pretty good at is they tamper expectations of Wall Street. So they get analysts to expect low so they can always go over the top and break expectations and help pump their stock price. Tesla, on the other hand, doesn't do that. Tesla and driven by Elon, they're always doing the shoot the moon goal numbers that at best they barely make. And ultimately, that's not super useful in the near term to their stock price. Now, in the 10-year history of where this company is going, is that going to matter? No. But for the day-to-day, month-to-month, and overall year-to-year, setting expectations that are really at the stretch of what you can meet does pay some cost in the stock market.
All right. Well, so but let me ask you this, and this is kind of what this video is about. Could it be that Wall Street has been right about Tesla all along? Now, I know there are shorts that are trying to obviously play against the company, and there are a couple of things to be said. I personally think it should be illegal to do that to any market, but but at the same, and I know that the Tesla is being the most shorted company. Now people can say, well, there's a reason for it. It's a high risk company with a high risk CEO and a high risk product and all that stuff. But at the same time, if we look at the chart, and I'm going to show you the chart of pretty much the stock all time. As you can see, it was nothing at first, then it started to go up, then it really started hitting some peaks, and now it's gone back to not bad price, still way higher than originally it was in the beginning when it started making a Model S in 2012 and 13. And it's been relatively steady, and it has been kind of watching Tesla, whether or not they're making profits, which they're not. Well, two questions. First of all, do you think overall the stock market gets Tesla right? And secondly, what do you think the stock price of this company should be right now?
I would say at different points in time, they've been fairly accurate at measuring the company's stock, but I'd say overall they're not. And the reason I say that is because the analysts that cover the market and have the influence to move the market and drive some of the more emotional investment decisions that people make, for better or worse, they have a very difficult time evaluating Tesla. And you'll see, and I've even seen some of the money talk show hosts, moneytainment talk show hosts on MSNBC talk about that, like, it's almost like every other week Tesla is valued based on a different metric. And they are a very hard company to value because they have a number of things going for them. They have vehicles, they have electric vehicles, they've got the supercharging network involved, and then they have this autonomy piece that's growing that could become its very own, its own products set on itself. And then there's also the piece of the data, right? So Tesla's self-driving vehicle data and the way that is used to grow a neural net has billions of dollars of value in itself. So Tesla is very hard to evaluate. Now, when the company sets out goals and they don't hit them, they've created markers on their own for the stock price to get hit. So I think some of those things are fair. But let's talk about profitability for a second, though. Tesla was profitable back in Q4. Q4 2018, Tesla made about $140 million profit. And that was something they hadn't shown in a while. Now, Tesla has not made profits Q1, Q2. I'm not expecting that they're going to make a profit in Q3. I'm expecting in the 100 million range loss, to be determined. But one of the things that we know is that Tesla's been spending a ton of money. They've built an entirely new gigafactory in Shanghai in the past 3 months. They're building out their Model Y production line. So when companies go into investment phases, it really doesn't matter that they're not profitable. And one of the things I like to compare it to is Amazon. And I say that because Amazon is now a profitable company, but Amazon spent years not being profitable while they grew and went after market share. And again, Tesla was profitable. I'm actually surprised Tesla had a profitable quarter while they were ramping up Model 3 because that was so expensive, but they still maintained profitability in Q4. I think we will definitely see them return to profitability if they don't this quarter, as early as Q4 of 2019. But I think at the very least, it's going to happen in 2020.
All right, well, so we should probably mention that Shanghai factory did not really get that much investment from Tesla. A lot of it are loans and incentives from the local government in China. So that wasn't really a big chunk from them. And when they started, receiving some losses, they were still in the very early stages of that. So I'm not really sure if it was the Shanghai factory that's getting on the way. I
And that's one of those things that it's a bit of speculation because we don't get to see the line item by line item on the balance sheet of expenditure. They definitely did take out loans to help support that, but I do believe Tesla is putting in a substantial amount of capital on top of the loans to support that endeavor.
Okay, so but let's talk about what would make them profitable, because right now, I think you agree that they have pretty much maximized what they got going on at the factory in Fremont, California, just down the street from us, a couple of hours away. They've built all the tents and underground stuff that they could. It is what it is. Maybe they can maximize it at 100,000 units, but I'm sure we agree that that's not going to be profitable. I think we also agree that the reason they were profitable very, very little, but it was 139 million in Q4 of last year, was because they were selling nothing but high margin Model 3, expensive Model 3s, where now they kind of have to sell the $35,000 version and much cheaper versions and so forth. The margins have gone down. What do you think will actually make them profitable? I have a couple of ideas, but let me hear yours first.
So here's the thing. They were selling higher margin Model 3s then. However, the average buy price of the Tesla Model 3 that people are buying is still over $50,000. So the majority of what people are buying is not just the SR Plus with nothing added on. People are putting add-ons on this car that's still putting it to a $50,000 price tag. But you are right. People are buying higher margin ones then. So what's it going to take for Tesla to be profitable? I think the Tesla factory in Shanghai that's going to serve the Chinese market is going to be a big part of it, because they're going to have cars made on that continent that are going to deliver to that continent. It's going to cut down costs substantially. And we know the cost to produce these cars in China are going to be far less to produce in the cars here in the US. I think one of the big piece to their long-term profitability is going to be the Model Y. I think the Model Y is ultimately the car that's really going to make this company, because it's going into a segment that has such a ridiculously large demand and so many buyers, especially in the US.
Well, I mean, I agree with you. Model Y is definitely going to be their best seller, though it is competing against quite a few cars that are already on the market. Not successfully, though, because, I'm definitely talking about Kia and Hyundai. They're just kind of almost disinterested in selling their pretty good, amazing compact SUVs. But, I would agree with you. Shanghai factory is definitely the key here. I mean, it's a 500,000 car max, I believe, capacity. But there is another one that has been kind of a hidden gem, and I'm not really sure why no one's talking about it. But I don't know if you remember, but Tesla acquired Solar City, and yes, there's a lawsuit saying that they've done it as a inner family favor, and that might be. But I was one of the few people who got actually really excited about it, because it was basically going to make Tesla vertically integrated energy company, which is much bigger than a car company. And with products that they got going on, solar panels, obviously, solar roof coming up and it's being installed around the world in small numbers, power wall and power packs and a freaking factory in Buffalo. All of this stuff was lined up, and somehow nothing is happening. As a matter of fact, there are reports that the Buffalo factory is making more battery cells, solar cells that end up in Tesla competitor hands, because they sell it to third parties. Panasonic is. Do you believe that if they get their crap together there and start producing energy products, that could be a bigger key to profitability than the Model 3 or Model Y combined?
So I still think Model Y is going to be the biggest revenue generator. However, I think they could do a lot more with solar. And from what I've read about this, that when the Solar City brand got absorbed into Tesla, that they actually did, there wasn't ultimately a fair amount of sales loss, because Tesla, a lot of people associated Solar City with solar. It's taken a while for as many people to associate Tesla with solar, so that there was some market share lost when Solar City ultimately got absorbed. Now, I think they could do a lot better. I think solar roof is something that long term is going to be very popular and very profitable once they get that nailed down. Obviously, they're still in the development stage of that, because they're selling so few of them. They obviously have more hurdles to cover. That's why they haven't sold more of these roofs, so that more widely available. And again, I don't know what production bottlenecks they may have on it either, so my scope into that is limited. And the one that has a high demand, I hear people talk about and people on wait list for, is the home batteries. I think Tesla home power walls are going to be another source of revenue generator that they really haven't been able to tap into, because for the longest time they have had backlogs, year-long backlogs trying to meet demand.
Well, I absolutely agree. But so what has to give? I mean, this can really be profitable. What do you think is preventing them from freaking making them already? I agree with you. We're in agreement. I don't think anybody out there does not agree that these products are amazing. These products that people can definitely use. But what's happening there?
Production. I think they got to be able to increase the amount that they're producing. And I don't know where the bottleneck's based upon, access to the rare earth minerals that are involved. It's due to the capacity that they have at their gigafactory making batteries, because again, they are making a lot of cars. And they made 100,000 battery packs this past quarter that had to get put on cars. They're making a ton of batteries for a lot of product. I think they need to, and I think they're actively working on increasing the production rate of their battery cells.
All right, so what? Let's get back to the stock market and their expectations. How many cars? How many units? Now that everything kind of equaled out, the Model S and Model X production is kind of evened out, and Model 3 average price has been kind of settled. How many cars do they need to make? And I don't care if they're making 3s and Ys or whatever. Just how many cars do they need to make to become profitable? And what should the profit be? And then also, what price point should Tesla be heading to if they're able to become profitable?
So, the number of cars is hard to say because I haven't really spent the time to do the math to figure out how the cars made in Shanghai translate to profitability, because they're going to be sold at a lower price, but they're also going to cost a lot more to produce. So when we start looking at Tesla having a new factory that they're developing and selling from, I think it becomes a lot harder to clearly estimate the cars. However, if Tesla were to deliver 120,000 cars or 110,000 cars, maybe even next quarter, I think we could reasonably anticipate to see them hit a small profit.
Now, how long is it okay to have that small profit? Let's say they're continuously going to make 100, 200, a million per quarter. Is Wall Street more interested in just the fact that they're in the green and that they're no longer losing money, or are they still going to be interested in this company continuously growing and growing and growing? Because I agree with you. Amazon is a great example that, you can grow into a huge company that Tesla wants to be, especially if it's also an energy company, unless you consider consistently reinvesting for the first, I don't know, 10, 15 years. And that's what Amazon did. You're absolutely right. Like, what are the expectations right now?
So I think whether Tesla is making slight losses or slight profits, it's more about the context. So if Tesla is making a slight loss or a minimal profit, but they're showing that they're investing their money in growth, meaning new products, new factories, new battery facilities, new car manufacturing facilities, the rest of the line of products that they have to make, which ultimately is going to include the pickup truck. And the one that I think is going to ultimately be the biggest difference maker in transportation, which is going to be the semi, that so long as they're investing in products that are going to give them more market share in more places of the verticals where they're working, I think them making small losses or even small profits isn't going to matter when they're growth focused. And again, one of these things that's unfortunate with Wall Street, it's become all about the quarter. When you focus on the quarter, it's very easy to lose sight on the vision of the company, right? Especially when you're talking about something like a new product development that takes 18 months from unveil to first product delivery. It's easy to get lost in quarter to quarter noise. What the real question is over time, quarter by quarter, is Tesla progressing? Is any company progressing to own more market share where they're investing their money? Now, if Tesla was only making a small profit and they weren't investing in growth, I think there would be a very major concern, right? Because if a company is not spending money on research and development and they're making a small profit, then you've got a problem. But Tesla is spending a ton of money in R&D and a ton of money in growth, and they're making losses, and that's what makes it okay.
All right.
Like to compare to a company that, I think this is a perfect company to compare to. And it's just one of these big billion-dollar companies that recently IPO'd, and that's Uber. So it's funny that Uber is starting to get more criticism, but you don't see near as much criticism as at Tesla or at Uber as you do at Tesla. Uber lost over $5 billion last quarter, and they're really a brand. Their only product is an app for scheduling rides, which, by the way, you could rebuild for far less than $5 billion. You could build for a fraction of that. Uber is just a brand and who's ultimately chasing autonomy, by the way. That's the way that Uber's investors ultimately make money, is if Uber figures out, they're making money based on the stock price, but the way Uber becomes profitable as a company is really based upon self-driving vehicles ultimately replacing humans. And Uber is losing per year what Tesla's got, or per quarter, what Tesla is sitting on in their cash flow that could float them for almost an entire year based on their current sales.
No, totally agree. Well, and yes, I agree. I'm not really sure why the expectations of Tesla is not to lose money. And in the grand scheme of things, you're also right. They're not losing that much money. They have the money to lose. They can go with the cash on their hand. They can go for a while with these losses as long as they're investing. So, all right, I agree with you. Now, what do you think the real stock price of Tesla should be right now? We should obviously say that neither one of us are investor advisors or whatever, but like just kind of out of curiosity, what would you be comfortable with? What do you think is the actual worth of the company as far as price per share right now?
I think they should be much higher. I don't think they should be above the $400 share price mark, but I think they should be in the 300 range. I think right now there's an incredible buy opportunity with Tesla, and it's not to say it won't go down more, but I think the company is very much undervalued compared to the total value proposition and the total ownership of the market they have and what's going to become the vehicle market.
I mean, I'm not a big stock guy, but I agree. I always thought from the very beginning, I'm no longer an investor. Obviously, it's a conflict of interest for me. But I always thought that, if we're looking 10 years down the road, I can see the stock being valued at $700, $800, $900. Again, in my mind, they still need to get that energy products out. To me, that's the big fish for them, and not self-driving and all other stuff. I think the competition there is much stiffer, and it's only going to get worse for Tesla in the future. But for the energy product, I think they actually have less competition and much bigger upside, and already a factory as well. All right, well, listen, I'm sure we'll continue this conversation because I think Tesla versus Wall Street is gonna continue being a hot topic for this community. Another hot topic for this community, especially in California right now, is your event that I'm also excited because I'm going. Tell us about that right now.
So our event is coming up on October 26th. You can get more information about it on our Facebook page, which is facebook.com/myteslaadventure. There's also a direct event where you can RSVP and buy a ticket for the event that I'm sure Alex will include in the description. But what we're doing is we're doing a meetup at the Tesla Superchargers at the Computer Science Museum in Mountain View, California. We're doing a drive down to the coast, and we've got a restaurant's private room booked out with a full view over the ocean, where all of us are going to have a couple-hour catered lunch together, spend time with the community, have a great time.
And I can definitely firsthand confirm that I have never been to your event that wasn't not only fun during the event, but also an awesome memory. And also, you should, whoever wants to see the pictures from the previous events should go to my Tesla Adventure Facebook page with all the pictures and I'm in some of them, so I'm excited. All right, man. Well, listen, I know it's going to be a sold out event. I'm definitely looking forward to that, and I'm sure we'll also revisit this topic of quarterly results and Wall Street reactions to Tesla. So thanks for hanging out with me, and I will see you next week.
You bet, Alex. I look forward to talking to this again with you at the end of Q4.
Same here, man. All right, so you've heard the man. Don't forget to buy tickets. I think there's only like a dozen of them left, actually, to be honest with you. That's what I heard from him last time. And there's also, I'm going to include the link to his podcast that he does regularly. So there's some stuff there as well. All right, well, listen, let me know what you think about this, because I think these opinions about this are obviously going to vary. If you are a shareholder right now, let me know if you're happy with the price. What do you think it should be? And what do you think the problem with this conflict with Tesla versus Wall Street that we keep talking about really is? So while you're at it, don't forget to subscribe to our VIP list, which is a newsletter that we send out every Saturday. An exciting story that we just weren't able to fit into our regular programming on this channel or on our website at e4electric.com. The link to that is in the description of this video, or just go to e4electric.com/VIP. Also, thank you so much to my newer Patreon, Howard, and all of my Patreons who contribute to this channel. I'm a full-time YouTuber, so this definitely puts bread on my table. I appreciate it. Boom. Patreon.com/e4electric, and also you get to watch most of these live. All right, looking forward to all of your comments. Other than that, see you guys next time, and remember to stay charged.